Good morning, good afternoon, good day. Welcome to my weekly market roundup, 30th January 2021. I am Sagar Nande. I used to work in IT. I have retired now, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Hi, Fran. These are the systems that I use in my live trading, and I will use the same systems in analysis today. Hello, Mike. Thank you all for joining. That was the last slide of my presentation. You know, I don't like to spend time on PowerPoint. Let's start with the global markets as usual, starting with the Australian Market Index AXJO. Earlier it was moving sideways, then it broke out of the watermark resistance. At that time, both daily and weekly had trendline support. I had mentioned that if it pulled back and went up with a bullish flow candle, that would give a go with flow long setup. I would be happy to take such a trade because there was a trend line support in daily, weekly both. However, it did not go up. Instead, it came down. It is now at the lower edge of the sideways range. The traffic light color is bearish. Because it is at the lower edge of the range, we are not going to take any short trade now. Is it bullish or bearish? It is still moving sideways in the daily chart. However, in the daily, it has broken below trendline support. That daily trendline support is not there anymore because it is broken. It is not drawn. The weekly trendline support is also broken. Weekly color is bearish. Daily color is bearish. So this is not a time to take new long trades. Is it in downtrend? No. It is still moving sideways, but not the time to take new long trades. And probably we'll find a similar theme in many of the global markets and in USA market as well. Next is Japanese index topics. Again, it is also in an uptrend, has trendline support, no trendline resistance. Good morning, Dr. Jeffrey. It has trendline support in daily. It has higher low, higher high. However, Friday's candle is bearish, the weekly candle is bearish. Now looking back, and I mentioned that in past several webinars, the weekly started to have indecisive candles with long lower tails. That was a sign for caution. The trend did not change that time. The trend has not changed now. However, it is also true that by the time these markets change to downtrend, individual stocks would have pulled back a lot. So it is not that you are going to protect positions, long positions, or not that I am going to protect long positions after the market is in downtrend, because that will be too late. And these are market indices. When they will be in downtrend, individual stocks will be in severe downtrend, at least some of them, because the averages do not always reflect the weakness of individual stocks, especially the weaker individual stocks. Japanese index is still in an uptrend but not a time to buy. Australia was the same, and China market. By the way, why I study the global markets is because nowadays all the markets are interlinked. Some market may be stronger than others, but if I see all the global markets are strong, Usually USA market will also be strong. They influence each other. Of course, US market influences others much more than the other way around, but still it is useful to look at the global markets. China's CSI 300, I mentioned about the multiple bearish headwinds in the daily chart coming earlier. I explained how one could initiate short position on the second bearish headwind day, at least using intraday charts. And since then, price has fallen. Daily now has lower low, however equal high. It's not in a downtrend. Not sure how the market will go. If we just have to look at the right side of the daily chart, then we have to say that we don't know what will happen next. However, looking at the traffic light color in daily and backdrop color in weekly, both being red magenta, we are not going to buy now. Not in a downtrend, indecisive. FTSE UK market. Well, this was weaker than the other markets. Also displayed a bearish headwind, and since then price has dropped sharply in the weekly. Is daily in a downtrend? No. It has trend line support and resistance both. So it is in a sideways range, narrowing range. Again, the Friday's candle and the weekly candle both are bearish in color shape, not a time to take long trades. And the Nifty 50, which is to be the strongest of the global market, India's market, that displayed bearish headwinds in weekly daily. Since then, price is dropping sharply. Is it in a downtrend? No. It is still having higher low and higher high. However, looking at the bearish headwinds in daily and weekly, one could protect stock positions. When Nifty 50, the market index dropped sharply for 1, 2, 3, 4, 5, almost 6 days in a row, individual weak stocks dropped a lot. Is it a time to start short trades? No, because it is near trend line support. It's also in an uptrend, but not a time to buy. And we'll probably see the same thing happening in the USA market. Let's look at the USA market using Q Elite on TradeStation, starting with the SPY ETF. Displayed one bearish headwind and second bearish headwind this week in the weekly chart. This week also had a reversal candle at pendulum high. That is always a bearish sign. If there is bearish headwind, bear release signal, which is also shown here, and a reversal candle at price extreme high, that is always a bearish signal. Is it in a downtrend? No. The daily is still not in a downtrend. It has higher lows and higher highs. However, it has dropped sharply for last several days. It stopped right at the yellow direction line. Now, if I draw the historical memory trend lines in daily using the hotkeys Ctrl Shift M, earlier in many webinars I mentioned that until this memory support is broken, the uptrend is intact. That memory support was broken on this candle. That was a huge gap down open, and from the open price fell further. Next day price tried to go up but reversed from the extension of the broken trend line. When a candle tries to go up after breaking trend line support and stops right at the extended broken trend line support, comes down with a bearish shape candle, that is bearish. And I remember on this day, Thursday, though media was largely bullish, I tweeted about it explaining this candle pattern, that reversing from extension of trend line that was broken, that was bearish. So I was ready to take short trades. Next day, Friday, price fell sharply. Is it bearish? No, it is still, if we look back, it is still in an uptrend, but as I mentioned, by the time it will be in a downtrend, individual stock positions would have dropped a lot. The weaker stocks, of course. And in this case, mega cap stocks also dropped. One thing I will analyze today, I will see together with you, that it's not only that the market ETFs dropped across the globe, including global markets, in the USA market, but mega caps, small caps, mid caps, everything seems to have dropped. Let's change the template back in the daily chart. That was SPY, not a time to buy. The same conclusion that we reached from the global markets. Now Nasdaq ETF QQQ displayed a bearish headwind this week. Bear release signal also. Bearish backdrop color. In the daily, it broke the trend line support. Again, this is the support that I mentioned. Unless it is broken, the uptrend is intact. That uptrend is not intact in SPY, not intact in QQQ also. Is it in downtrend? No, but the uptrend is not intact. And DIA, the daily trend line here is also broken, the immediate one. So here also the immediate uptrend is broken. Of course, there are other trend lines nearby. Okay, not so nearby, but below the current price. Weekly also has a trend line support, but the immediate trend line is broken. That is what happened for SPY, QQQ, DIA, all of them. And if we look at IWM, here also the immediate trend line support was broken on Friday. These are the supports that I was looking at and was pointing to in all the recent webinars. They are broken now, so it is clearly not the time to take long trades. Now if I look back on my forum posts in recent couple of weeks, all had been bearish. Let's very quickly review some of them. Alcoa, I'm not going to show where I shorted it, but in recent days or weeks maybe, it fell sharply. In the weekly, bearish headwind fell sharply. Why I am going through it? To explain that by the time the market turns bearish, these individual stocks drop a lot. So the right time to short them was earlier, not now. First one was Alcoa Material Stock. This is XLF, Financial CTF, dropped significantly. I could and did short somewhere here. Then an airline stocks, LUV. Here I made a very good use of the trendline resistance and watermark resistance. Fell sharply. A bank, Wells Fargo, displayed a bearish headwind, was at a kind of double top with bearish shape candle in weekly. From there, price dropped sharply. And airlines manufacturer, aeroplane manufacturer, Boeing, I shared it on this bearish flow candle. Since then it has dropped. Weekly is continuing to drop. Netflix, I shorted it looking at the weekly trendline resistance, and to me at least it was an abnormal up move after earnings. I shorted right on the day of the earnings. It has dropped since then. And TJX, I shared it somewhere here, don't remember, but since then it has dropped. So all of these stocks have dropped. In last few days I might not have shared many trading ideas. Why? Because price has already dropped. My technique allows me to short probably little bit ahead of others, and at the market bottom it allows me to buy little bit ahead of others. And by the time market starts to drop and everybody takes notice, volatility is very high. And when volatility is very high, stocks which have liquid options like even Boeing, Netflix, TJX, their options bid ask spread expands. So the optimal time to short the stocks is before other people notice. Could we still short? Yes, of course we could short still. And a idea that I shared yesterday was Facebook. This is one of the mega cap stocks. What I noticed is that it came to weekly trendline resistance. That is a point that one may start to look at shorting. Then I noticed that it announced nice earnings, and after earnings it went up initially but closed sharply lower. In fact, on this day itself, Thursday, if you watched the instrument, you could try to short it during the day using fine-tuned chart. That day, Thursday closed very bearish. Why? Again, I point to this pattern, reversal candle at price extreme high. That is very bearish. Reversal candles are bearish, and at price extreme high, the likelihood of the stock coming down is much higher after the reversal candles. So you could short it on this day, or you could short it on Friday using fine-tuned chart. That is when I observed it, and I did take a short trade on Facebook again with verticals. If I go to the intraday fine-tuned chart, if you could short it on Thursday, you would do it right when it was breaking below early range low. If you did it on Friday, like I didn't catch it on Thursday, you could short it right when it was going below early range low. And I have a small profit in that trade. So all these stocks dropped. One thing to note that they are all in different sectors or industries. Alcoa, then XLF ETF, then LUV Airlines, WFC Bank, Boeing, aeroplane manufacturer, Netflix, entertainment company, online service provider, and TJX. TJX is stores, TJ Maxx. All are in different industries. I could short in very different industries and they dropped. Now, if we look at the mega caps, hi friend, yes, we'll certainly try to go through short put verticals. Mega caps, okay, before we look at the charts, if you see no, only Microsoft closed higher. You may not be able to see it on your screen clearly because of the shading. Microsoft ended the week higher, 2.66%, but all the other mega caps fell this week, starting from Amazon at 2.6% drop to Tesla minus 6.27% drop for the week. Now, if we look here for the daily interval, that is Friday, then all the mega caps dropped. Tesla was the worst performer, Amazon relatively best performer, but that also dropped. So all the stocks dropped. However, one thing I noticed is that many of them closed Friday with long lower tail. So I have put the Friday's worst performers in a separate chart, and it is here. Friday's worst performer of mega caps was Tesla, next was Apple, next was Microsoft, and next Facebook. At least Tesla, Apple, and Facebook ended the day with a long lower tail. Is it bullish candle? No, it is not a bullish candle. The color is red and also the body is much larger than the lower tail, but still the candles closed with a lower tail, so there is a chance they will go up on Monday. I'm not going to take a trade on that possibility at the close of Friday, but on Monday, if they go up, they may give low risk entry opportunity, buying opportunity using fine tuned charts. Microsoft didn't have that much of a long lower tail, but Facebook had, Apple had, Tesla had. Now, if we look at Amazon, Amazon is still moving inside a range. It also had a lower tail. It stopped at the yellow direction line. So it is possible that the mega caps will recover on Monday, at least in the beginning, and that may lead to a recovery in the market as well. Now, if we look at the mega cap top 20, by the way, I contacted Metastock about the issue they had with Fire. That has not been assigned to developers yet, so I don't know when they will resolve it. I will keep following up with them. Now, if we look at mega cap top 20 custom index, it is still moving sideways. Again, that shows that though whether the custom indices or custom indices may appear sideways or pulling back, individual stocks may do much more damage, even mega caps. Mega cap custom index is moving sideways. We can't say it is bullish, we can't say it is bearish, but if we look at the last candle, of course we are not going to buy based on that. Now let's spend some more time looking at the market. I always say that we can decipher market weakness from market internals better because they show under the hood what is going on. Market ETFs or futures may not show that. Let's look at few charts. Let's look at USA Composite Daily. Why so? Because remember why I took the bearish trades when the market was bullish? Even my webinars I mentioned there was no weakness except one. That one weakness allowed me to take short trade. That was large number of bearish headwinds in daily, weekly, in global markets, USA markets, individual stocks. Now if we look at the composite index of on the right hand side NYSE, left hand side NASDAQ, here we have a bearish headwind at the top for the composite index. Another thing to note, on the daily charts, here both are daily, for both NASDAQ and NYSE, the immediate trend lines are broken. Now, to look at the internals, I prefer to use the weekly interval. So let's look at the composite indices, internals weekly. And I mention always that advanced decline will show the weakness first. And now we can see advanced decline is starting to topple over. Next, the weakness is usually shown in up-down volume. That is not showing as much weakness as advanced decline, and new high low is of course not showing any weakness. But following the understanding that advanced decline shows the weakness first, we can see some weakness now. And in the weekly chart also, NASDAQ composite has displayed bearish headwind. NYSE composite also had displayed bearish headwind. That was 2 weeks ago. The weekly trend line in NYSE is also broken. So that alerted me and allowed me to take short trades. Now let us look at the major indices, and I will look at daily, weekly first. I will use the daily to focus on the top 3 plots, that is percentage of stocks where 50 MA is above 100, 200 MA, that is still bullish, has not rolled over, but percentage of stocks above 50 MA that already rolled over some time ago, here, here, here and here. I mentioned it in webinars earlier, and now the percentage of stocks above 200 MA has also rolled over for all the 4 major indices: Dow Jones, Nasdaq 100, S&P 1500, S&P 500. S&P 1500 is very broad. Even for that, everything has rolled over. That is why I mentioned the current weakness is not only in mega caps, as we saw the mega caps drop, not only in mega caps, these major market indices starting from Dow Jones narrowest to broadest S&P 1500 showing all of them the internals also weaken. But again, to see the internals with better insight, we may look at the major indices with weekly chart. And here I am going to focus more on the advanced decline. Here it is starting to roll over, and for some of the major indices, in fact here all of them, the up down volume is also showing the weakness. Remember, for composite indices, the up-down volume was not showing the weakness, but for major indices, the up-down volume is also rolling over and certainly advanced decline. So the internals are looking weak now. That is the usefulness of the internals. It tells us to be cautious beforehand. Be it the percentage of stocks above 50 MA or 200 MA rolling over or the advanced decline up-down volume, all are telling us to be careful. Now if I look at the total view, there is not enough distribution yet. So that means if we wait for distribution day, we would already take a big hit in our positions. Here the candle chart is SPY. SPY we saw is still in an uptrend, but if we see the total view, the percentage of stocks above 50 MA, for the total view also it rolled over. That happened some time ago and I mentioned that earlier. The total view 200 MA is also rolling over. There is a distribution count of 1, not 2 or more yet. Will it come next week? It may come. We'll be careful because the immediate trend lines are broken. One more thing that I shared on Twitter earlier, and you may keep an eye on that, and I'm going to how to do this. Let me expand this and this. These are charts for intraday market breadth. These charts are using futures, but sometimes I look at ETFs because that shows the gaps more clearly. I use it for directional decision during the day, but here I'm going to look at 30-minute interval or maybe even 60-minute interval because these futures trade almost 24 hours all the days of the week. What I mentioned in Twitter earlier, there were some significant up-down moves. That was not usual, and if I go back further, you may find some significant up-down moves. Those volatility moves were already telling us to be careful. Now, if I go back to only yesterday's chart, that's Friday's chart, initially price tried to go up, and here I am explaining how you could use these charts to take precision trades either in individual stocks or on futures, either the micros or these futures NQES. Initially price created the early range high and low, then tried to go up, reversed from early range high. Now remember, based on the Twitter snapshot of SPY that I shared, that trend line support was broken and then price went up and was starting to come down from extension of the broken trend line. So you would be ready to take a short based on that analysis, and you could short right at this point using the bear release signal. If I change it to 5-minute chart, in the morning session the guideline is to 5-minute chart, is to use 5-minute chart. In the NQ, it displayed a bear release signal. How do we take short trade in an instrument that we already planned for before? One is to use the early range breakout or to let it go up. If you let it go up and become overbought, shown by the stretch indicator, band indicator, then I mentioned it gives the lowest risk entry opportunity. What are the things we need? We need a bear release signal. We need a reversal at a pivot level. We need a candle color that is not green. Anyway, if it was green, the bear release signal would not have come. So we need a candle color that was not green, reversing at pivot resistance, and we need high pressure or high volume at the reversal point or just preceding the reversal point. All those were true for NQ. In addition to that, it had something that is called tick divergence. Here price went up, but the Nasdaq ticks this candle pattern here. It shows at that time how many stocks in Nasdaq exchange as a whole cumulative tick was going up or down. The idea is if the futures is going up but tick is coming down, then it is called tick divergence, meaning the broad Nasdaq is not participating in the up move. Is that enough reason to take a short? No. The short is taken based on the Q setup, but in this case there was additional confirmation from tick divergence, and you can see the tick divergence was there for ES also relative to, and here the tick is NYSE tick. NYSE tick also had divergence. Now interestingly, if I waited for a short trade setup, I would not get it in ES because it didn't give a bear release signal. That is fine. I needed to take a short trade only in one future. I wouldn't take short trade in multiple futures at the same time for intraday trading, and NQ gave that opportunity. If you watched RTY, the Russell futures, it gave a very nice shorting opportunity at the top yesterday, but I'll not go through that. You know the techniques to be applied for taking intraday trade, so you could use that on RTY also, maybe at a different point in time. But Nasdaq shorting was an easier shorting decision. Why? Because yesterday Nasdaq was relatively weaker because the mega caps were weak. So market is showing weakness from global markets, from USA market futures, ETFs, and the market internals. Now, if I look at Q edge, let's start with the useful 1 month to 1 day, 1 month to 1 day, sector, industry, stock, advanced decline. Now we can see very clearly that it is weakening. Very clear. Across sectors, industry, across all the periods, sector, industry, stocks, advanced decline has reduced, and this week's drop was so much that up to 10 days everything is now bearish. 1 month is still bullish, but for swing traders 1 month is too long period. For swing traders it is clearly bearish. Now if I look at more detail sector performance over 1 day and 2 day period, on Friday all sectors were down. If we combine Thursday, Friday, only one sector was up, that was utilities. That was a defensive sector. That is showing market is weak. And if we look at a longer term view, over 1 week, only one sector up. We saw that was, which one was that? Over 1 here, consumer staples, the red bar. Consumer staple over 5 days, consumer staples is up. Over 10 days, 3 are up. They are the green bars: communication services, consumer discretionary, consumer staples. All are defensive. So over 5 days, over 10 days, only defensive sectors up. Over 1 month, we saw the market is still bullish. From the pie chart, we saw that, and that is reflected here also. Over 1 month, many defensive, non-defensive sectors both are up. But for immediate swing trading purpose, 5 day, 10 day, 1 day, 2 day, and of course real time Friday, everything is bearish. Now if we look at the bucket analysis, and I have added back the comparison with previous days, but I have not released it because this comparison we have to be careful about when we are dividing the stocks in buckets. In this program we are not calculating the bucket for every day. So now when I'm seeing D1, that is 1 day, that is Friday's bucket, then we see 74% stocks are below the midpoint of the buckets. That is bearish. Only 26% is above. And these bright green and bright red lines in the bar chart, they are showing that more stocks are in the down buckets now. From 5 to 1 and then less than 0, these are bearish buckets, and 6 to 10 and more than 10, these are bullish buckets. Now more stocks are in the bearish buckets, and that is expected because 74% of the stocks are below the middle bucket. Now if we see, there is a huge jump in the percentage of stocks in the lowest bucket below 0 relative to previous day. And here one thing we have to keep in mind, I wanted to mention that this comparison is using the buckets of Friday. So on Friday this percentage is about 14% of stocks in S&P 1500 and in the lowest bucket. On Thursday, is it as low as 1%? That is, seems to be a huge jump from 1% to almost 14%. Yes, but this is calculating this 1% using the buckets of Friday. So it is relatively showing that on Friday, if these so many stocks are about 14% are in the lowest bucket, considering the buckets are in the same location, what percentage would be in the lowest bucket on Thursday? That is really small, less about 1%. So that there was a huge jump. If I could explain that calculation of percentages across buckets, the buckets are not moving from day to day. So I'm using here Friday's buckets and seeing if those buckets levels are same. On Friday, of course, about 14% are in the lowest bucket. On Thursday, if the buckets were at the same position, on Thursday only about 1% would be on the lowest bucket. So that is a big jump. Of course, this was based on input from Dr. Jeffrey. He would know better. If I understood correctly, when 40% stocks come to the lowest bucket, in the last video I mentioned maybe last two, probably he can correct me. Probably if it is only in the lowest bucket, 30-40%, then there is a chance of reversal. And I am going to keep an eye on that. If that happens when the market ETFs, market futures are at a trend line support, then I'll be more happy to take a long trade, and probably they will also give a reversal long trade setup, bounce, box, or headwind. I don't expect a go with flow long setup at that point, but I will expect a bounce setup probably. I'll be happier to take bounce or box setup at that time. So this is the first time market is starting to drop after the bucket calculations were added. So I'm going to try to make use of that. You may keep an eye on that as well. So bucket analysis are also showing weakness. Sector, industry, stock, QH plots are showing weakness. And if we use finder, very weak again. 87% of all weekly signals are bearish. 73% of strength signals bearish. 87% of trend continuation. 91% of reversal signals very bearish. The number of bearish headwinds is still high, 124, but that is now dwarfed by number of reversals. Market was at a very high level. When we have so many weekly reversals, I mentioned earlier, reversals are always bearish, and reversals at price extreme high, the market was at high, is even more bearish. And we have large number of box setups also, which are also capturing double tops, triple tops. So we have many reversal signals, that is bearish. Even breakouts, huge number of bearish signals, and go with flow, huge number. Relatively speaking, when I'm saying huge number, I'm not looking at the numbers, I'm comparing with the bullish signals. Bullish signals are very small compared to the bearish signals in the weekly chart, weekly plot. And if I see the daily, that is Friday signal, again 89% of all signals bearish, 92% of strength signals, 90% of trend continuation, and 78% of reversal. Everywhere is bearishness. On meta stock, you are also able to plot something. Let me show these two instruments, RLG with a dot in the beginning, dot RLG. And let me apply the weekly daily template for that. These are growth stocks. There are two symbols, some of you at least might not know about them. They may not be updated in real time, but at the end of the day they are updated. .rlg, that is Russell growth. And here also you see there is a bearish headwind this week, backdrop is bearish, and the immediate trend line is again broken in daily. That was growth .rlg, and if you see value .rlv, that is Russell value, also displayed a bearish headwind at the top, created a false upside breakout at the watermark that was created by bearish headwind earlier, and daily also dropped. It is at trendline support, but for the immediate last few days it dropped sharply. So RLG, RLV, whether growth value, we see both of them dropped. We saw mega caps dropped, we saw S&P 1500, IWM, so small cap also dropped, S&P 500, everything dropped. That is showing bearishness, certainly not the time to take long trades. Now, having said that, could we try to look for some buying candidates? Okay, let's try. If we succeed, are we going to buy? No, probably, but we may keep them in mind. If the market starts to go up, we may buy. I have not carried out this exercise. Let me look at the USA liquid stocks, carry out a fundamental analysis. Because market is looking weak, I am going to consider buying only fundamentally strong stocks. In any case, I personally don't buy fundamentally weak stocks. I always buy stocks either strong in value or strong in growth, at least one of them. So let it carry out a fundamental scorecard analysis, retrieving data from Refinitiv. Now, Fran asked about looking at verticals. We'll try to find a trading candidate and look for verticals on it. Let's look at the score of these stocks. Look for stocks that are strong both in valuation, also in earnings growth. On top of that, looking at the market situation, looking weak, I should say very weak if we remember how market was going up earlier. If we don't keep that in mind, we cannot say very weak, it's just weak. But relative to how it was going up, it is very weak. So I'm going to even filter for secondary valuation to be strong. And looking at the market, let's also choose stocks where earnings quality is strong. Short squeeze. Who doesn't want another game stock? Okay, let's choose that also. And QDEL. There are some stocks that in fact went up on Friday. 4 of them went up by more than 2%. Let's look at them. What I am looking for? A Q trade setup. One is UNFI. Yes, it went up on Friday, but it closed with a bearish shape candle. So I'm not going to consider buying it now. Close. UCTT. Yes, it closed higher relative to Thursday, but bearish shape, bearish color candle. No Q buy setup. Close it. SIG, Signet Jewelers. In fact, if you ran the analysis I'm running now, or looked for at least one star candidate, Signet Jewelers came onto the radar of Q traders long time ago, and since then it has gone up a lot and it is holding on quite well. Do I have a Q long trade setup? No, because it is too close to the upper boundary. If it came to the trend line support around 30, 31, 32 and went up from there, I would be happier. I would not like to buy it now, but of course relative to the other stocks, Signet Jewelers, ticker SIG, is much better, but I don't have a trade setup, so I'm going to close it. And QDEL, it went up on Friday had a gap up open, and from there it went up little bit but closed with a long lower tail, long upper tail, that is mixed, not bearish but mixed because the body is hollow, but it is also near trendline resistance. It's above upper boundary, so I don't have any buy setup. So I'm going to close it. Close this also. I think we don't have any buying candidate when we applied the stringent criteria. Both the valuations are strong, EPS strong, earnings quality strong, short squeeze is also there. So let me remove the short squeeze requirement. That may be not required, and let me focus on the stocks that went up by at least 1%. I can click the scissors icon to focus on them. Nothing is removed from cache, everything is removed. The other stocks are removed only from this view, and I'm going to look at only the stocks. I didn't look at QDEL. I already saw SIG, I saw HOLX, Lumin, Abbott, DHT. These are the stocks I did not look at. Let me look at them. Okay, DHT is in fact looking better. If I was at all going to buy any stock of these stocks I saw so far, this is looking better. I'll come back to it. Abbott also very strong, certainly strong. Friday also closed with a bullish candle, but I don't have a queue setup. I don't like to buy, though it is strong. I don't buy because it is already up above the upper boundary. Close this. LUMN closed higher on Friday but bearish color, so I'm not going to buy. Close. Hologic, HOLX, closed higher on Friday, however has an upper tail and relatively close to upper boundary. Let me close that. So I'm left with DHT. Why I am interested in it? Let's look at it using weekly daily, and let me make sure I have my settings set to USA market. Okay. Why I was interested to look at weekly daily for DHT is that it has trendline support in daily, multiple of them, and I can see several candles with long lower tail. 3 days out of last 4 days had long lower tail. That is bullish. It also has a bull release signal. It has very high volume on Friday. The weekly candle is not strong. So if at all I am going to buy this stock is if Monday it starts to go up. And what setup will I be applying? I'll be applying in my mind the bounce long trade setup. Bounce setup has certain conditions, and those conditions does not rely on the weekly chart. It relies on a sharp drop, find support at pre-existing trend line, then price has to close higher with high activity or pressure. So all are met. One condition is not clear, not met on Friday, is that it should not have an upper tail. If the upper tail was not there on Friday, then it could be bought on Friday itself. Because it has an upper tail, my approach would be to see if it is going up on Monday, maybe above the high of the day, or if I am using fine-tuned chart, I may precisely try to enter using early range breakout, or even better, a bull release signal. So I would not enter it on Friday, but I might look for a buying opportunity on Monday. If I carry out a fundamental scorecard for this stock, DHT, let's do that. We know the stock is fundamentally strong, but this one-page snapshot gives a clearer view. Isn't it much clearer? Great valuation, great secondary valuation, great earnings quality, huge earnings growth between 200% plus to 600 to 4,000 plus in last 3 quarters. The last quarter had 666 666% earnings growth. So this is a stock which has great valuation, great earnings growth, in fact great revenue growth as well. It makes money, very high dividend yield, 14.9%. Even if it is halved, it will be more than 7%. So this is a good buy from dividend yield point of view also. The industry is oil and gas, storage and transportation. Let's look at the industry using QH. Industry is also relatively strong, is showing some acceleration. So DHT is a buying candidate that we found even in this market. Possible buying candidate if it goes up on Monday. Interestingly, if I remember in the last market roundup, maybe I was looking at one of its peer stocks. Is it there? Let's look at the peer stocks. STNG. Remember in the last webinar, when I was explaining how to look for longer term investment, that is to look for strong valuation, earnings growth is good to have. In this case, earnings growth is also there for STNG. Here the earnings quality is not so strong, that is fine, has revenue growth. And in the last webinar, we concluded that STNG in the same industry could be a longer term investment. And isn't it nice, today we found another buying opportunity in the same industry, DHT. Before opening STNG again, in fact, DHT is also at price extreme low. Just going out of that, and again a bullish signal, very bullish signal is this reversal at price extreme low. Reversal at price extreme high, bearish, reversal at price extreme low, bullish. So that signal is also there for DHT. STNG that we saw in the last webinar when discussing longer term investment. Why I focused on that? That was also starting because of the trend lines. It is doing, both of these are certainly doing better than the market, are holding on to the trend lines. So you might or I might look at both of them. STNG is one that I saw in the last webinar, and okay, we saw today also, and DHT is also a good candidate. Now, is DHT having enough options? Let's look at it. May or may not. If it has options, we may try to create a vertical on it. Now, if I am buying for longer term, of course, using verticals would constrain the profit potential. Doesn't make so much of sense, at least for my own account, to take longer term positions with verticals. I would rather take it with synthetics. And again, I was not taking synthetics much earlier, but nowadays I am very comfortable. I first saw Dr. Jeffrey was using them a lot, then I started playing a bit about with it, and now I am very comfortable. Now let's look at DHT first. Is there options on it? Yes, 5 cents wide, it's not that bad. I am looking at the bid ask spread. Okay, sorry. The current price is 540. Now, of course, the market is closed, so the spreads may not be representative. No, spread is too wide. If we see the 5 call strike, which is the first in the money call strike, the bid is 35 cent, ask is 55 cent. So there is no point looking for any options trade in this one, for me at least. Too wide. 35 cents bid, 55 cents ask. I'm not going to trade options on that. And I think STNG will be the same. Let's check it out. STNG is better. It is at $12.1 now. So in the money strike is $12. There the bid is 1.15, ask is 1.35. It's better, but still 20 cents wide. 20 cents wide is too much. So we are not going to, at least I'm not going to trade it with options. So if I have to discuss a trade on verticals, let's look for some bearish trades. Though I am careful not to think of too many bearish trades right now. Why? Because several mega caps have long lower tail, and these mega caps have been very strong in the past, recent past. The custom mega cap index is inside a range, not really in a downtrend. So if the mega caps go up, market will most likely go up. So that's why on Monday at market open, I'm not ready to short anything. I may keep something handy, but I think I have enough short positions open already. All with verticals, except I have a synthetic short position on SPY, and that is giving me quite good profit that I entered earlier, and I am holding on to that. Even if there were volatile days, I'm holding on to that synthetic short position on SPY. That is giving me good profit. Others are all verticals, but if I wanted to look for bearish trades just to create a vertical, let's look at breakouts, because I see there are many go with flow, that is bearish flow with breakouts. Maybe we'll find something with bearish pressure also. That may be a way to take vertical short trade. Let me start with price extreme high by using the green paint bar. So these are stocks at price extreme high. I love to short them if I have a setup. Look for bearish flow, then a bearish breakout, and then high bearish pressure. Many stocks are there. Let me carry out a fundamental analysis first, so that I focus on the weak fundamental stocks. I don't have to open so many stocks charts. Updated. Let's go to the scorecard. Let's use 1 star rate. None. Wow. So the bearish candidates I found on technical charts, they are either having good valuation or earnings growth. Okay, let's just short by performance. Let's try to find some technical short trade, but I am not happy to short the undervalued stocks. So let me choose the medium valued stocks. I am using this yellow color button, yellow color battery, medium valuation stocks. And let's look at these few charts. Okay, we have some shorting candidates. So WY, way, I'll not try to pronounce it. I'll make a mistake for sure. WY is the ticker symbol. I'll come back to it. Next is UCBI. It has broken below some trend line, but another trend line is nearby. I'll skip that for shorting. SXI, Standex International. It broke below trend line support, but there was a long lower tail 2 days ago. There is a small lower tail on Friday, but that long lower tail 2 days ago and long lower tail on Thursday is not giving me that much comfort to short it. So I closed that. HOG, Harley Davidson, closed below one trend line support, but there is another trend line support. Not going to short it. Close. AMP closed below one trend line support, but there is another trend line support. Not going to short it. Close. So I'm left with WY. Let's look at it using weekly, daily. Okay, this is something I am happy to short. Relative performance tilting down was stagnant for several weeks now. This week has a bearish shape, bearish color candle in weekly, has a reversal candle. Some time ago it was at price extreme high. Reversal candles at high price level are very bearish. It also tried to go above this watermark resistance in weekly that was created by bearish headwind, but failed after stagnating for several weeks, more than a month. 1, 2, 3, 4, 5, 6, 7, almost 2 months. And it did finally create a false upside breakout. So all signals are bearish in the weekly. In the daily, it already has trendline resistance and broke below trendline support. Broke on Friday with bearish pressure. It is at price extreme high. So this is a stock I am happy to short. Let's see if it has enough options liquidity or not. WY. Okay, I should qualify that when I say I'm happy to short, for shorting with stock, here the stop will be a bit far away. I'm not happy about that. I would like to put the stop above the trend line resistance. That is a bit far to my liking. So with a stock using the daily chart, I'm not going to short it. But I may keep an eye on the stock using fine-tuned chart tomorrow. That will give me very low risk entry point, and even better if it tries to go above this trend line support and reverses. Right at the point of reversal, I may try to short it. That is giving me low risk entry point. But if I use the daily chart for stock itself, I am reluctant to short it. Not my style. I'm not a breakout trader if the stop is so far away. But with verticals, that is okay because time will be in my favor. I may take it with at least 30 days to expiry. So let's see if we have a liquid options trade here. WY. Let's use 20-day expiry. Current price is 31.19. In the money strike is 31. Bid is 125. Ask is 160. That is too wide. Now again, now market is closed. This bidder spread may not be representative. So if it is the regular hours bidder spread, I am not going to take any options trade here. But for the sake of it, just for creating a vertical, again with this kind of spread, I am not going to trade any options, be it vertical or naked. But just to try it out, let's look at the chart again. Let's say price is going to come somewhere here when I am going to book profit. Why I am pointing to that area? Because price stopped there for a while. There was some buyers and sellers, both sides traders, so it may stop there around 29 and currently price is about 31. So if I choose to trade vertical, I'll buy 31.5. I'm paying $1.65. One way is to go along the chain and see where I'm getting half of that credit back. So 165, half of that credit will be at 30. That I'll get about 75 cents back. But if I use the trend line or my stock price target, that is around 29, 29.5. So I am going to buy put option 31.5. I will sell which one? Either I can sell 29 for 50 cents or 29.5, 60 cents, or half of the buying price, half of 165. So maybe 30.5 or 30. So here we have many choices. We could buy, of course, 31.5. That will be the best choice in my view. And sell which one? We could sell any one of them, starting from 29 strike all the way to 30.5 strike. Now, which one do I choose in real life? If I think the market is more bearish than bullish, the more bearish it is, the more out of the money I will go to sell because I will maximize my profit that way. If I sell the 30.5, market is bearish, stock will drop, but my profit will be limited. So in the current market, I would then, this would be my choice, buy 31.5, and then I just look back, half of that is good. So let's say 29 This is 50 cent, this is 60 cent. Let's say 29.5. So let me sell 29.5 and analyze it to see the reward risk ratio. If I come here, my max profit is 127. This is one lot. Max profit, the white color, is 127 and max loss is minus 73. So 127 versus 73, that is very good reward risk ratio. In fact, it is also shown here. Interest station, max profit 127, max loss 73. Reward risk ratio is very attractive. So I would prefer to use these two strikes. Then let's go back, let's create again. If we, before I start again, remember the number 1.74, that is my reward risk ratio. Why? Because I chose the strike, the short strike, little bit far. But if I wanted to buy 31.5 and get half of that back, that will be sell 30.5. Then see my reward risk ratio. Oh, this is the one I chose. No, let me uncheck the other one. Here, my reward risk ratio is much lower, 1.22. In the first case, my reward risk ratio was higher, 1.74. If I short the nearer out of the money option, my reward risk ratio goes down. That's why in a market like this, I would have selected this reward risk ratio. If the market was less bearish, I would have selected this one, because the lower the reward risk ratio, higher is the potential to hit my profit target. What is the usual profit target for verticals? 50% of max profit. In this case, I would choose this one. Again, that was just an example because friend asked, with this kind of spread, if this bidder spread width is still there during market hours, 130 bid, 165 ask, I'm not going to trade options with that. The market is looking bearish. All my bearish trades I took earlier, maybe people were not so bearish then. At least most people didn't take short trades that time. Recently, all my trades for short term were bearish, other than few defensive areas, and I mentioned in the last webinar those were more for longer term holding. All were bearish and they worked very well. I am not going to take new short trades at the market open on Monday, because if the mega caps go up, they have lower tails, then the market will recover. But once they recover, I may be ready to short again. I am not looking for taking long trades right now, other than longer term investment. Like I found DHT, very nice dividend, STNG also very nice dividend. But short term trading, I'm not looking to take long trades now. We are past the 1 hour point. Thanks a lot for joining. Today I didn't mess up with the audio. I often do that. Good for me. I look forward to seeing you in our next session. Most likely that will be on Wednesday, 8 a.m. Eastern Standard Time. Thanks a lot again for joining. Keep safe. And as you can see, whatever be the market condition, if we apply disciplined approach, we are able to take some money from the market, and we don't have to really use stocks like GameStop. I didn't trade that. I'm not planning to trade GameStop. Thanks again. Have a great weekend. See you again. Bye.